Hello, crypto world. Welcome to the Chart Historian. My name is Justin, and on this channel, I delve deep into crypto charts, exploring chart structures, fractals, and patterns. So today, I have the Dow Jones chart open, and I have a fractal from way back in 1929. So this is the 1929 peak before the Great Depression, so the Great Crash. So this was the peak that turned into the Great Crash that took place back in 1929, and it finally bottomed out in 1932. Now, it's important to note that this is only a small portion of the decline. It's just the peak. So as you can see, it has been roughly following this fractal fairly closely. Nothing's ever exact, but as you can see, starting at the peak here, it moves up here where it's supposed to, it moves up here, but then all of a sudden right here, it's starting to do something different. Now, there's always the chance that it could double over and continue to follow this, or it could go sideways as well. There's another option that it can go higher up, that is above the current all-time high. Now, before we get into this fractal too much, I want to build my case why I even have this fractal, first of all, on here. Once I build my case, we'll jump back to this fractal, and I will focus on the possibility of this actually going higher than this current all-time high. So to begin my case, or to build my case, let's go back to the very beginning of the Dow Jones. Okay, folks, so here we are at the very beginning of the Dow Jones. So the first data on the chart is from way back in 1896. The part that I'm going to focus on is this area right here. So it ends at the peak of the 1929 peak before the Great Crash. The Great Crash bottomed out in 1932. So this was the Depression, the Great Depression that took place in America. Now, the reason why I have this all chopped up or boxed in with different boxes and different colors is if you took this fractal right here, copied and pasted it onto this side of the chart, it wouldn't really match. It doesn't make sense because the timing is different. The timing, the height, the depth, it's all different. But what I want to demonstrate in this video, and this is important, is that structurally, what has been playing out after 1932 has actually structurally been very similar to what took place from the very beginning of the chart to the peak right before the Great Crash that took place. So what I'm going to do is I'm going to copy and paste each of these parts onto this chart, and we can examine it and see, and you can see what I'm talking about. Okay, so as you can see, I have the first fractal placed on here, and it's color-coded. So the blue square represents this fractal right here, copied and pasted onto here. Now, I stretch this to match the current timing, height, and depth of what is occurring over here. And as you can see, it's a fairly close match. Let's move on and copy this fractal onto this part now and see how that looks. Okay, so here we have this part now from over here, copy and pasted onto this part of the chart. And as you can see, it's not exact, but it's doing what it's supposed to be doing at the right time. So it went up here. From here, it also goes up. And as you can see, it has, in this case right here, it has a little corrective action right here, same here, same here. It's all in the same place, and finally it goes to here. Let's continue on and copy and paste this fractal over here and see how that looks. Okay, as you can see, it goes sideways when it's supposed to go sideways, and even if you look at it, the general gist is kind of in line with what it should be doing. It moves up and down when it should. The waves are for the most part right on. There is variation, but that's also expected. Every time a fractal repeats, it's never exact. There's always some deviation or originality in each rendition of the fractal, but the overall structure should remain the same, and that's what we are seeing with this. Let's move on and So this was this gray box. Now we're going to do this red box, and we're going to place it over here, right here. Okay, here we go. So this moved up quite a bit, and it's making everything look kind of squished over here. But as you can see, it moves up when it's supposed to move up. It even has the little correction that took place over here and the great kind of push upward right here. It's all there. Let's continue to move on, and let's do this blue fractal next. Okay, here we are, folks, with this blue fractal. And as you can see, once again, the waves jive for the most part. There is some variation in it, but overall, it's roughly following this outline. And by the way, this is a very large or big overview of the entire chart. I have it on a month candle, so it's zoomed out very, very far. Let's try what comes next. Okay, so the final fractal right here is this purple one, which brings it to what could be the peak. As you can see, it has this move up, right, this choppiness right here, and the move up, same here. Now that we have the overall idea of what is taking place on this chart, let's zoom out here. We can see that it has been following the rough idea or the rough outline of the Dow Jones between the very beginning, 1896, and 1929. So it has been following this overall fractal. So if this continues to play out, which I believe it should, this has taken 90 years, people, for this to play out. So it is a very, very, very big pattern that is at play here. Now, it could go up higher, and this is what I want to entertain in this video. So let's zoom in and compare today's peak back to the 1929 peak and see exactly how things are matching up. Okay, so here we are back in 1929. This is the 1929 peak, and this is kind of more of a zoomed in picture of what took place at this part right here in the chart. So what I'm going to do is I'm going to place a Fibonacci retracement level on this area. Okay, so I have a Fibonacci retracement level placed on this chart. As you can see, I have the 1 level right here at this peak, and I have the trough placed down here. I'd like to bring your attention to this area in the blue, which is below the 1.618 level. So as you can see, price moves up, and then it consolidates in this zone right here before pushing up further. But then it also does this consolidation right here before pushing up to make the ultimate peak, the final peak of this move upward. I would like to compare this setup to what is currently taking place on today's chart. Okay, so I placed a Fibonacci retracement level in the same way I did on the 1929 peak. There's this consolidation area right here, and I placed the 1 level right here at this peak, and I placed the trough down here at the bottom. And as you can see, price has moved up and gone into this blue area again and done another consolidation, just like it did back in 1929. This is below the 1.618. So let's go back and take a look at that 1929 peak again. So as you can see back here in 1929, there was this consolidation that took place here before, once again, moving up to the ultimate peak. Now, on today's chart, if this is potentially taking place, what we could see is eventually a move up that would bring it to, I mean, it may not go to the same height. It could be different, but back in 1929, it did not make it to the 2.618 level, so it peaked out somewhere in this zone. So could we see something where price moves up, and then once it's moved up here, then the true peak takes place? Let me go back. So this is on a week chart on both of these candles. Let me put this on a day candle, and we can examine this area a little closer. Okay, so we see it consolidate here back in 1929. This is on a day candle, and then it does this move up right here before moving up further. Back here in today's chart, is this that move right there where it moves up, or could we see something more substantial, something like this, and then that move up to what would be the peak. On today's chart, if we place some key moving averages on here, you'll see that we have, here is the 100-month moving average, here is the 200-week moving average, and here is the 200-day moving average. So we have the 200-day moving average right, well, it actually poked above it, so it needs to stay above it if it's going to move up higher. Now, will it continue to fall back down? That is a possibility. It could continue to fall and then maybe try again, or it could continue to fall lower. Those are all possibilities, or bounce around in here for a while. But if this does get higher, it will need to get above these, and it will need to get above them substantially. All right, so I took these moving averages off. So the reason why I'm presenting this possibility is because this could affect crypto. If we did see a move up to this final peak, like we see here back in 1929, this could affect crypto in a very good way. We may still see some bouncing around further in this area before we could see something like that, just like back here in 1929. It did this consolidation, and it tried to do it, but it came back down before actually making it back up. So back in today's chart, we could see something like that take place. It could get above that 200-day moving average, maybe hit here, or who knows, come back down and go back up, or this could have enough stamina to go all the way to reach that potential peak. Now, again, folks, this is speculation. It could do something different, but I think it's important to at least entertain that possibility that this may not be that peak that many think it is, and now we're headed into a recession or depression. It could potentially move up before it does that. But on the big picture, we have been following this giant pattern, this giant fractal for 90 years. It would be amazing if it turned into another pattern, but folks, that is, at this point, I don't know how possible that is, put it that way. All things are possible, but not probable. So it would have to maybe go sideways for a really long time, for years, and maybe then I would start saying, hey, this chart is doing something different. But it's been following it for 90 years, people. So that's a heavy-duty, powerful pattern at play. You know, if you find this type of analysis where I deep dive into chart structures and fractals and patterns interesting, you should hit that subscribe button. That way you'll be notified when I put out new content. You'll have to hit that bell button, by the way, to be notified. You can also hit that thumbs up button if you found value in this video. And one important thing, I am not a financial advisor, so none of this information that I present here should be construed or used as financial or investment advice. I'm so glad you caught this video. I hope you catch my next one. Have a great day, and bye for now.